Yo, 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 welcome to day 7. I was just reviewing the trades I took up to trade backtest 37, 10 previous, all up there. Look into the winning trades, the losing trades, what matches, what aligns, and documented them. I don't think this one goes. Or does it? I'll keep it there. I'll keep it there. But from day 6, we went to November 14th. Okay, and now we're going to November 14th to up to December. That's what we're gonna do. Alright. I get it. I get it. Oh, am I going too far? Too far ahead. I'm gonna go on this chart. Okay. So we have, well, we disrespected this for disrespected. We have this right here. We have these. And we just wait for the sweep. Wait for the sweep of this. That's kind of it. Let's see. I'm not really interested unless we go like to maybe like this right here. Alright, because then we would sweep all this. But okay, looks like we got the sweep. We want the little tap. Respecting this 1 hour demand zone. That is 15% volumized in strength, which is good. So I'm gonna tap down to, let me see the daily. I mean, it's just going down, like it's just going down. Alright, sweep this, boom. Yeah, we have this. Oh. We have this. Maybe we tapped a little bit into that. It's fine. It's fine. Alright. We go multiple days of down, like down. Okay. You know, we could argue we go something like this. Right, because Bitcoin looks very bearish. Oh my god, am I sick? Alright. So okay. We still have this. Let's do this. We have what do we have? What do we have? Like this. Our image high. Put it like that. Alright. Anything here? We have that being respected. Alright, we have anything on this left side of the curve. We have this. We have this little breaker being respected. Yep. That aligns with that, which also aligns with this. Which is an extremely strong zone. So I would argue this is into this from low, where we could possibly put a stop loss there. Is there anything else? Anything else? Anything else? Sometimes there's just too much stuff. Too much jargon going on. No, we could target these. We would target these. But let's just target this. Because unless price goes up, but I would need to see. So we have this. This fair value that unmitigated. I mean a little bit, but we can put it at the 50% of that. And I believe it lines up with this right here. This mitigation block. Yep. I'll put it right here. I'll put it there. So a little bit above the FVG. We have anything else? I mean, right here, I think it aligns with this as well. A little bit of that. So breaker forms, yes. This is the breaker. This is breaker. Went up, swept them. Displacement, yep. Yep, we traded through the breaker. Yep. So, matter of fact, I feel like we could target all of the, and just kind of swept it. Just kind of swept it a little. We can target this upper echelon. Okay. Depending if price even gives us that retap. It might not. It really may not give us that retap. Oh, chill. Oh, we got swept. We got swept through. Okay. Let's see. We got swept. They swept us. Let's see. I feel like we had the phases correct. Maybe they just wanted another drawdown into that previous week low. Another hit of that, which is just straight down. No retracement, nothing. From here to here. What has happened? Why did we do that? Sorry, reading this incorrectly. I mean, from a whole month, we've just been going down. Like, the whole month, from here to here, just been down. Just been down. So there's all of these right here. So on the list, we have another one which is down here. So all the way down there. Alright. Did I do anything wrong here? Well, let's see. No, not necessarily. We had, well, I still have these marked up from last time, but yeah. But we had this right here. This would be the low risk buy. Yes, correct. The mitigation block was respected. Fair value gap right here. Put the entry a little bit. Let me compare it to a trade we took a W on. Well, one, there's not this clear expansion into our zone. That's what I've noticed. Clear as day expansion. Hmm. And this one, we were able to, okay. Oh my goodness. Hmm. Yeah, hmm. You can say right here was the original consolidation. Distribution 1, distribution 2. Hmm. Oops. Why is this? Why did this one fit? 1, I can see that we spend more time up, and then we had this re-expansion. That's what I've noticed. Oh my goodness. Oh my goodness. Hmm. Well, yeah, I was expecting a little tap, and then we go up, which is fine. Yeah, it's fine. We take the L, it probably goes down lower, if I'm being honest, to sweep this right here. Alright, that's fine, that's fine. Take the L on the chin. Alright, this one we're 0 for 1. -1. Oh, that's fine. That's fine. Oh my goodness. That looked good. That looked good. But it is what it is. One, two, something. You can argue this right here. There's a low zone. November what? 17th? 17th. 30-minute we wouldn't have avoided this. Would we? Would we have avoided this? Oh my gosh. Oh my goodness. Oh my goodness. Huh. Well, one thing I'm noticing is that this is like what? The reaccumulation phase I'm entering off of? Because it's more time spent above here. Yeah. Because usually these you would be able to get like ideally it should have been like this. That's what I'm noticing with my losses. That's what I'm noticing. Because let's look at the losses, right? Took it out, took it out. This one, took it out on this one. This one. Look how we respect the mitigation. Yeah, this one, like, we spent so much time in the root. Let's see. Look at the fails. I want to see the fails. See, this one, you already had the big drop down, but the thing was, we didn't sweep these equal lows. So I was thinking, okay, you know, we might retrace back into here, and then we get another drop down. That's what we did. We did retrace, but we didn't get a drop down. You know, I shouldn't have even entered this. This didn't even respect the fair gap and mitigation block on this side. It just went up, it closed above, and went down. So, yeah. Do I have that anywhere? Is this the example 42? What is? Okay, you know what? Yeah. Void trades if two confidences aren't if we disrespect two confidences versus respecting individual one. Reference example 42. we go. Should have food. Yep. We never close below. Where's the fail? Where's the fails? True one failed. Yeah, okay. Common occurrence I've noticed is that if we don't get in like in the early stages and wait for the retracement, it's not. It usually fails. I don't think this matters. I don't think this matters. Let me do that way. Because that would be a continuation. Okay. To do. Noticed the values we take. It's usually after price. It's usually we miss the first move down and we wait for retracement to be short. Notice the L's we take. Let's say we missed the first one down. The resignal seems okay. This one we can reference. But we might as well try. I mean, this isn't even the low risk short at that point. What would that be? That would be the reaccumulation, right? Or redistribution in that case. Let's see what I have this here. Might be like a price. But we don't sweep the original foundation, so that's why I'm entering. Yeah. This is fine. Yeah, this is fine. That's the lowest button. We never get a retracement. Usually price is different. Same thing does. Yep. Oh my goodness. Oh, I'm the rain of a white Christmas. Alright, the 30-minute we would have played it. The rain of a white Christmas. Where all the other women and all the other women. We'll go down here. Ba-da-bum. Yep. All right. Let's go for number 49. All right. Sweep that. Do we sweep into this? Another domain zone. Let's see. Maybe we go up here. Okay. Let's see. Let's see what even happens. What do we happen right here? Yeah, it's just going down. Like things we swept this. Oh, that's kind of crazy. Swept the original consolidation. There's one up here, but I wouldn't say that's the. See, now we're in a different phase. This is the distribution that is going down. Let's see. On the daily, we tap into this one day, but totally this. Alright, long term, this is definitely the distribution leg. This is the smart money reversal. Distribution 1, distribution 2. Now, but we're not trading the daily. I'm not a monthly trader. Alright, issue is there's no liquidity right here to even. So I mean, there's this right here, but if we use that, what 1, 2, 3, 4, 5, and then you went up. You went up. Oh, maybe they use this. Swept this. Oh, swept that. It went down and re-swept it. I mean, it's not a low resistance liquidity one. We swept it. And then we had distribution 1, distribution 2. Okay, you know what? Let's see. I don't like the fact that we swept this, so I'm not looking to enter this. No. I wouldn't be looking into this at all. It's just probably is gonna hit this one instead. Because let's see. We have a breaker. Let me double check something. Order block. Oh, this is the order block. This is the low breaker. Trade through that breaker. We are kind of respecting that breaker. I'm not gonna lie to you, but I still don't like this right here. We have to mark up the phases, girl. But I do. Like this. Oh. Step 1, step 2, tap into this, respecting it. Anything else below here? Okay. Let me just mark out the confluence and see would I even look at this. This isn't clean though. I mean, there's one right here. Fair value that. This is like extremely messy. Like extremely messy. Alright, if I were to even look at this trade, this is what I would do. But the thing with that is it's not. I don't like how we didn't, like we swept this. Like I don't, it should have been left here. Right, why we swept this to use it as fuel lower. So went lower, we did go lower, sweep this. We did sweep all that stuff. So it's sort of like, you know, how low are we gonna go? Point control is showing a little bit higher. Let me see the daily. Let me see the daily. We do tap into this. Okay, that's not gonna work. But, all right, let's do the pros and cons of this trade. The con one, this original consolidation was swept. Right, there's no low resistance liquidity run. There's no. All right, it's not a good sign for us. Two, this isn't as clean as I would like it to be, but we are sort of like respecting it. Well, we kind of disrespected here. Some by a little. We have that breaker being respected. It is a green vector candle too. All right, let's see. I don't want to enter this trade, but I also do. So okay, con one is our original consolidation. Right? We have what the distribution one, distribution two, potential smart money reversal. Our price action is not always going to look that clean. We are tapping into a bigger high time frame draw right here, like this internal, this fair I get right here. However, we could just go down. The thing was, we went down the entire month. And we just went down the entire month. So my thing with that is, do we want to go even more down? Okay, I really don't like this. So we're not in like the proper phase is what I'm arguing against. Oh damn, I do have this. But I mean, no, we aren't in the proper phase, so I wouldn't like this. I would wait to maybe tap into this and see what happens. Even though we could get this, we could. I wouldn't take it straight now. I'm not gonna take this trade. But let's see what happens if I do. If I hypothetically would. Nice. Nice. Avoided this trade. Nice. That's good. That's good. Very good. Very good. Very good. We avoided that trade. Very good. Now I would. Alright. Okay, so one, avoided this trade because of this. Right, this sweep, I really did not like the sweep. And two, if you didn't see it, this little fair value gap was actually disrespected. This one right here. I would, and it also spent some time in here too. So I would prefer that it would have been like boom, like a wick, like all the good ones we had, like a little wick, like boom and up. So that's what it is. Did a good job. Good job. Let me zoom out. Nice, nice. Very good. Yep. All right. So reason one, this wasn't the swept that shouldn't have been. And reason two, the price action did not look as clean, right? One, we actually disrespected this 5-minute fair value gap right here. We spent a little bit of time in here. Usually it'd be like a little wick and then go up. Two, I would have preferred maybe a mitigation block that aligned with that fair value gap. So the unicorn model, is that what they call it? No, aligned. I mean, actually no, it is aligned. Because we have this. This is aligned, and the fair value is inside it, so it is kind of aligned. So it is aligned, but didn't look that good. And also lots of neutralization. No clean imbalance displacement. Right? In the other trades, the successful trades, let's see. Let's find a success. Yeah. That there's clean imbalance right here, right? It's left behind. This one is none of that. There's none at this potential low, like none of it. Besides this, but that's like a little later. This one right here, and this one overlap with an inverse fair value gap, aligning with the breaker blocker of 5-minute FVG respected, like all of that. So this one, we didn't even get that 5-minute FEG. We got this one, like it overlaps, right? Breaker blocker on the outside, FEG on the inside. Didn't look as clean. Didn't look as clean, so we didn't take it. Right. Avoided 2. In the 30-minute, we wouldn't have even gone that. 30-minute would not have gone that. Whoa. Oh, we're not 0 phone. Would avoid this. Would avoid this. Alright. So we go lower, we go lower. We go lower. The next point of interest is right here. Alright, let's see. Alright. Okay, okay. Just sweeping, just sweeping. Okay, we get that. We get that. We get this right here. Yep, yep, yep. See, this is what I mean by it's cleaner. Like, you see all these fair value gaps being created, displacement, all that stuff. So, oh, actually, can we argue this is? Can we argue this is actually the original consolidation? Could argue that. We could argue that. Yeah, we definitely could argue that. Distribution 1. Distribution 2. Smart money reversal. But the thing is, I feel like we might have missed it already. If it sweeps this, I'm not gonna be looking into it. All right, let me see. Only this. As we as the lowest may be distribution in another phase. As yeah. Yep. Yep. Okay. What do we got here? Okay, beautifully respected. Beautifully respected. Finally respected. We traded through multiple. Okay, this is extremely strong. Alright, this aligned, this overlap, but I know it's not. I'll just set it up for him. The thing is, that's not a. Oh, I mean, it is. You could say this is a intermediate term low. No, because we rebalance that FEG. Well, as well as respected this, so that's pretty high confluence. All right. All right. Oops. If we even get this, right? If we even get this, I'll put it. I'm not gonna target all that. I'm gonna put it like here. All right, let's see what we have. I mean, we have. Do we have? We have this. What about zones? Yeah. It's also respected. Okay. Yep, we close above that variation. Matter of fact, this is actually the breaker. That's the breaker. These right here are the mitigation. but I mean, it kind of overlaps. Negation. Maybe it just overlaps. I didn't use the wick. Do we use the wick? We use the wick, right? Yeah, he uses the wick. That's fine. Okay. Alright, you know, this looks really good, but we might miss it. We just may happen to miss it. And remember, I only buy under discount, so you know, we could do this as well, but I mean, let's just do the 50% of that. If we sweep up here, it's gonna be canceled. If we sweep above these ones right here, it's gonna be canceled. So let's see. Wait. Let's go over the trade. Right, okay. I mean, this is clear as day, right? In here, tap into a lower time frame FVG. All right, so we could pinpoint it. All right, we have the point of control is going to be up. It's going to be up. The point of control is literally going to be up. So let's see something. Let's see something. I'll draw at this. Okay, they're saying this is fair value for here. So we might tap into here. Let's see at the start of this original consultation. Let's see at the start of like 12. Okay. I'm gonna be looking at enter. I'm gonna be looking at enter off here. This is the intermediate term low. It's not, I don't know why it's showing, not showing, but this is, yep, characterized by a low here and a low on the right. Yep. Use to rebalance. Yep. Let's look to enter. Now, I am kind of worried that we might actually sweep this and then go up. But the fact that there's overwhelming confluences in this zone is important to us. It's very important to us. But let's see, do we even re-tap into that? Okay, we didn't. Alright, buddy. That sucks. But I mean, that's what it is. And it is what it is. Can't do nothing about it. Alright, this would be cancelled. This trade is cancelled. Let's see what happens. Yeah, okay. Makes sense. Yep. See, I wouldn't really re-enter off of that, if I'm being honest. We do have all that deeper stuff, but no, because my strategy would be different for that. I wouldn't. Yeah, we swept this. I wouldn't enter. take this image. 1, 3. And let's zoom in on this position. What the hell is this thing there? What is it? It's 1:30. I'm gonna eat soon. Alright. So it looked good. It looked good. Looked good. No. Price action. It looked good. 5-minute big block. Post 5 minutes. Use that as the terminal. 1 hour click into G. No close through. So, fortunately, we didn't get an entry and we swept original consolidation. Yeah. So I didn't enter. So I removed limit. Yep. Yep. Yeah. Yep. Yep. Trade 2? I don't think it would have done. Trade 2, we would have took out. Let me remove this. All right, you know, I'm kind of really leaning against the this one. Uh, That's what I'm leaning towards against. Oh, actually, this is missed. Missed. That's what I'm. That's what I'm leaning towards. All right, this just wants to go down. Like, it just wants to go down. I don't know what to say. It's just down freaking 30K. Like, all right. What's next to left this? Oh, we'll see. There's this right here. There's this. There's this. The draws on liquidity right here. All right. That's the next draws on liquidity. I mean, if we do have that, there's this effigy right here. Unmitigated, by the way. Unmitigated. So is this original consolidation or something? Low resistance liquidity. Yep. So let's see. Let's see. Okay. Alright, that's the next draw. Let's see what even happens. Wait, what? Oh. Yeah. Alright, I'm not interested in this until unless unless maybe we go over here. That's where I'd be interested. Okay, okay, just blast into the zone. Damn, Bitcoin, what are you doing? Blast into all these zones. Everything. There's nothing left. Nothing is down. Straight down. The next one is this. Can I extend this to the right without having to drag it out? Extend to the right. Oh yes. Wait, what do I remove that don't extend? Oh. Alright, next one. Guess next one is down here. 74K. Let's see what happens here. Maybe maybe we reverse from here. Let's see the daily value. It's just down. Free fall. So these ones, okay. This is like 60K. That was kind of crazy. Yeah, it's kind of crazy. But yeah, let's see what happens. That is down. Do we get a reversal in here? Where's our original consolidation? We say, oh, I don't like that. I don't like that sweep. You could argue this is the original consolidation. One right here, or matter of fact, you could say this. Okay, this is the top. This right here, original consolidation. distribution 1, distribution 2, and then distribution 3. All this lower stuff right here. Hit the spine on reversal. And to be honest, let's just see. Let's see. Alright, we got a good close here. Good close here. Alright, we had a little fake sweep right here. A little sweep and then a re-sweep of that. Taking out the people who decided to long here. As well as we have this little fair value gap below. But take it low below. You know, this may not actually be touched until later. Alright, so let's see. Okay, we already got that. That's pretty nice. It's pretty nice. We got one down here. One down there. We got this little block here. We got this mitigation block right here. Alright. Okay, let me expand this now. Oh, it's right here. Mitigation block right there. Order block. Wait. Okay, I'll just use this one, but to show. Alright. I'm gonna be interested. I'm not gonna be long in this. I feel like this may be the little fake out they have. I'm gonna wait until price taps into here, forming an intermediate term low. That's when I'll be looking to enter. And my target, well, we just gotta see what the target is. Let's see. Do we even? Whoa, calm down, buddy. Okay. Okay. We didn't sweep these. I believe we have potential to go up higher. All right, we tapped into that. Okay. Oh, we had a red and green vector. That's really good. Okay, I'll be looking to enter all of this. This bad boy right here. Low. Let's see. We have a change character. Let me see what's next one. We do have a change of character there. Did we sweep it? We did sweep. Look, man, I'm getting kind of tough at this. Like, I literally said, yeah, we probably sweep this. People will probably use that as a stop loss. Yep. Probably use it as a stop loss. Maybe tap into this. All right. Now, let's see. We have this one being okay. Okay, this one's being respected. We have this little mitigation block right here. Well, I guess you argue this entire mitigation block. Yeah. Breaker block, my bad. Breaker block. Block. Respected. Tap through, yep, respected. Alright, I will be looking to enter. I'm actually going to look to enter stop loss here. And I'm going to be looking to target. I would do like this. I'll be honest, I'll do this FAQ. Alright, a little 5% move. Target. Okay, actually no. Or we have to be a little bit higher. will do. Let's start it up there. Oh, this is not in discount. Okay. That's oh, no, it might be in discount. Alright, it's in discount, we're good. Alright, I'm gonna do top of this one. Yeah, the top of that one. Alright, that's what I'm gonna do. I don't think we're gonna get it, if I'm being honest. Like, I feel like price will just go. Oh my goodness, calm down, calm down. Okay, we got it. Yep, I'm entered. Okay, we didn't respect that. It's kind of crazy, but I'm entered. I'm technically entered. All right, take profit. My take profit was at this. Sure, I got. Let's see. Daily. I mean, it's a good. You gotta take the risk. It's a good risk to take. I mean, the VWAP, it just tells us. See, volume based. I mean, it's just going down. That's just what it's telling us. Down. It's just going down. And that lines up. Well, this is the move that swept the liquidity. It lines up with this as being the value, the high, the value area low. Let's see. Do we have anything else we could use? Let me get a little tougher. So this was good. Well, okay, so we don't have any roadblocks per se. Not really any roadblocks. Yeah. Solely based on volume. We don't have any roadblocks based on volume. I still think like hard time frame things is okay. That's the point of control. We reached fair value. Oh, maybe that's why we were aiming for fair value that low. Okay, you know, I'd be looking to enter off of this. Well, matter of fact, I am already entered off of this. Let's see. You gotta take the risk. Always take the risk. Especially when you're young. Take the risk. We have this. We have that. We have fair value gap being respected. Yep. Tapping into a breaker. Yep. Tapping into an order block. Oh, no. No order block tap. That's fine. I do like this red and green. Shows that they are entering. You know, I'm entered. Yeah, I'm entered. Take the L or move on my life. Remember, I don't set it to break even. Ever. Like, it's never going to happen. No more break even trades for me. I feel like we're going down. Come on now. Come on now. Come on now. Come on now. You could chill. You could chill a little. Okay, I'm gonna go on the 30 minute. Man, I'm tough. I'm so tough. I'm actually so tough. Oh my goodness. Oh my goodness. I'm freaking tough. Let's see. Do we probably tap into this? Probably tap into that. But look. Look. This is the low risk buy. Yes, this is the low risk buy. This right here is a low risk buy. Alright. That was a good trade. Yeah. Let me see if we even. I was gonna tap into the original consolidation. I'm pretty sure it's up here. 88. I'm like pretty certain. Okay. I mean, I was cool with a 2.9. That's fine by me. Oh my god. Alright. Let's go over why this trade worked, right? Alright, so we swept literally tons of liquidity down lower. I see original consolidation here. I see distribution 1. I see distribution 2. I see distribution 3. Oh shit. Distribution 3, right? Right into the smart money reversal. I see a smart money reversal right here. Right? It's clean this time, a violent spike down, violent spike up, leaving FVG's displacement compared to, what was it? Compared to this, right? It's not clean. There's not a lot of red vectors combined with green vectors. There's fair value gap neutralization. There's no strong displacement. Like there's no FEG right here, right? Well, in this case, there are right here, right here, right here, right here. Displacement, green vector candles. That's what I like to see. It's not required, but that's just what I like to see. And we got that. We got this close right here. We got, what else we got? What else we got? FEG right here, aligning with the breaker blocker right here. Perfect tap of it. A little tap right here. Red vector, green vector. What does that tell you? Yep. We got that. We got a, whoa. Okay, we got a breaker formed within that sweep of this right here. It's happening into this. So I kind of waited for a 5-minute signal on that, right? Because we could just fake it out, right? If we didn't have a change of character, if we didn't have a 5-minute fair value gap being respected, or like a order block being respected, breaker block, I wouldn't have entered. because you may see prices go down, tap deeper, and then use that as inducement. Use this as a fakement. Use that as a fake out liquidity. Right? And maybe you could tap into here. And if you were to tap into here, it still respects the order block. It didn't respect it wouldn't have respected the breaker block though. So I entered off of there. FEG right here. Yeah. I mean you could technically put it right here, but I'm sick of like missing trades, so decline, yeah, that's fine. Take this. Target. Yeah, you could target up here. If I'm being really honest, you could really target up here. But I targeted right here. I was cool with that. Held the trade. Never set your trade to break even. Break even is for people not like us. And oh, this right here is the intermediate term low. Yeah. Yeah. Oh, good trade. Good trade overall. All right, I'm gonna document this. I'm gonna end it here. I'm gonna eat, and then I'll probably do it all back again. Right. See you guys in a bit. Yo, we're back. We are so back. Yeah, we left off after we took this dub. I documented it right here. And yep, we hit that. With this. Next point of interest is you know, you know, either we hit this, or maybe I'll see what happens when we clear this liquidity. Where the hell was it? This one. Not bad. This one up here. Yeah. Oh. Maybe we tap into this higher one. Maybe we clear this and then we tap into this. Alright, that's kind of like where I'm at. And on the daily, yeah. Can we look and see the eyes inside of me? Go on and take it. I don't even know. I don't even know what you mean. I don't even know. Alright. Other than that, I'm not really interested. I'm not necessarily interested in actually. Yeah. We have this fair I got right here. We have this fair I got right here. We could go lower. Oh, and tap this lower right here. But we just had a reversal on the 5-minute time frame. What do we really want to do? Alright, right here, we could short it. I feel like we could short it. But we just had the reversal. But on the 1 day, that kind of like aligns with this. On the 1 day. I mean, the 1 day is right here. The next draw, but we just reversed. Right, we just reversed. Do we really just want to go tap down here, or do you want to go up, sweep these right here? Which I think it's more plausible we go up. So even though we do have like a, I mean, it doesn't mean we can't, we can't, it doesn't mean we can't, go down here. But let's see. If I can identify a, oh, would we have already missed this trade? Right, like right here. You know, let's say I set an alert here, right? Let's say like, you know, I set an alert. We have an alert. Let's say we had the smart money reverse right here. We had that there. We had a bunch of other stuff here. Now, let's say here, we could say this is, we could say this is a level of consolidation. Is it the original consolidation? Well, that's what we're about to find out. All right. One distribution, two distribution. I wouldn't say this one is simply based on the fact that we cleared this. I wouldn't want it to clear it. Oh my goodness. Is this right? Hold on, we had, okay. Smart money reversal. It's definitely smart money reversal, right? Maybe I'll go on the 15 and get him. See, sometimes it's too messy. We just had the reversal here. Does price really want to? We swept this, we went to internal. We could. I feel like we could. I just need to be able to properly identify the phases. Yeah, I don't like how that swept it. See, the difference between this is the time spent apart. This is kind of like, dang, it went down and it swept up. This one, it went down and then re-swept it, right? So we could argue this is the original consolidation, right? Even though it's not low resistance liquidity run, which is different from this because look, this one went down, swept up, right? Consolidated for a little bit, broke away, and then re-swept it. Right, this one just consolidated for a little bit, had the sweep within the consolidation and went up. So we could argue that maybe used as the low, I mean the original consolidation. Even though I wish we would have not necessarily used that. I wish we had. But at the same time, these examples, these people's examples, they what is something. Look, this one, same thing. Sweep it and then just went up. He said that's the original consolidation. Same thing right here. Swept it, went up. Right, swept it, went down. Let's find some more examples right here. Sweep, and then went up. So it's like sweep, and then went up. This one was low resistance, this is high quality. It's like down, sweep, went down. So it's like this one low resistance, this one low resistance, this one not low resistance. See, but like this one's high resistance, right? Because we have this sweep right here. I mean, we do have low resistance right here. We do create it. This one I wouldn't even consider this one. Like this one is too wide to be considered original consolidation, no? That's too wide. But this one we swept it and went up. And these are all examples from his mentorship. So let's see this one. No, sweep. Don't. Boom. But they did leave all these low resistance play right there. Look, this one, look. Sweep, high resistance. But I mean, it leaves low resistance afterwards, right? So it's consolidating, sweep down, fail to displace through it. We wick back up and then create these low resistance swings right here. So, I mean, yeah, these examples are telling me it doesn't necessarily. Where's Mr. Jacob? Yeah, he's saying we're looking for low resistance. But at the same time, this could be categorized as low resistance on the other side, like literally all this right here. Yeah, so I know in the previous example, which example? What was it? See, these are two different examples, right? Original consolidation, sweep down, sweep of that, and then down, right? This one is just like the time spent, right? This one swept away first and then reswept. This one swept it within here, so you know, okay. So these, okay. Now, accumulation 1, accumulation 2, potential smart money reversal. We're good. Then again, mind you, it did match our 1 day fair value gap with this 1 hour fair value gap we have. So, and how long has it been since we did this trade? A couple days? Alright, you know. Alright, but we wait for our strategy. Is there even a... What there is? There's one right here. Right here. Mitigation forms here. breaker. Same thing. Did we have any fair value gaps in here? Any inversions in here? Okay. All right. We have a 5-minute fair value gap overlapping with a 5-minute breaker blocker. So we could argue this is the intermediate term high, which could be used as our stop loss. It doesn't show it because this right here is trader discretionary, because it doesn't know the confluence it uses. This indicator just tells you intermediate term high is short-term high left and to the right. It doesn't do the rebalancing for you. So we have this, rebalance, boom. What else do we have? We have this. I was expecting. We could say, let's go enter off of here and target. Okay, that's kind of crazy. That's kind of crazy. That's kind of ridiculous. That's kind of greedy, gluttonous. Let me see, before I do anything, let's go over what's happening, right? Well, one, rebalance into here. This portion right here, the day hasn't closed, so we don't know if we're gonna wick all the way down here where we're gonna close. But we take it level by level. Remember, we always take it level by level. So we just swept this. There is this below. There's also this above. So it was either I take this potential to go down, but mind you, I'm not holding it all the way down. Holding it for, what is this, a 2 to 3% move? 2, we can either, if this doesn't play out, I'm going to be waiting for this to be top. Right? Ideally, we get a sweep above here, tap into here, and then reject. Or, my bad, maybe like a wick into this 1 hour, and then reject, right? No close. Actually, no close above here. Ideally, that's what I would like to see, right? So if that doesn't happen, I'm not going to be trading this at all. That's one. So let's draw the point control, right? Let's see. From here to here, what? Okay, point control is lower. Indicating that fair value is a little bit lower. Let's see off the sweep of this liquidity though. Okay, it is indicating fair value is lower. It's lower. it wants to go lower. All right, based on that sweep of liquidity, this right here, this is what led, this was the leg that led to the sweep. Boom. Indicating fair value is lower. It is lower. Let's see the anchored view up. Yup, okay, fair value is lower. Let's see on like a higher time frame basis of things. Well, I mean, we just went down. We just went down. It's higher, but that's like we just went down from that. I'm not holding my trade all the way for these months, so it's better to anchor it at a more recent level. Another thing we can do is we can do it from the days. Right? Is there a naked point of control somewhere that we would most likely tap into? Here, this is one. It's at the previous day low. Our price usually would like to refill that because that's categorized as fair value. Now let's see if there's one above. Okay, there's this right here. Okay, let's see one here. There is a negative point of control above. However, we combine confluences, right? We're combining confluences. We're seeing the daily is telling me tap off that 1 hour bearish fair value gap. Tap off that 1 hour fair value gap bearish. The 5-minute is telling me, okay, we do have original consolidation, right? You know, even though we kind of swept this to push liquidity up further. Some people, they say they prefer a sweep, but based on Mr. JCap and these other guys, I think it's kind of just depends. Like it's better if you have this, right? Yeah. But at the same time, there's also trades where it's like this, right? Where it's they sweep it. They sweep it. Yeah. But at the same time, when they sweep it, they leave these failure swings right here. So that's kind of as low resistance. I mean, if we look at it like if we look at it like that in that lens, then yes. Oh my God, I can't speak. We look at it, if we look at like that in that lens, then we could argue these are the failure swings, 100%. Okay, we have this is accumulation 1. You could say this is accumulation 2. I mean 1, 2, but I'd rather just say that's we have a higher areas of concentration. Yes. Small money reversal. Potential. Okay. You know, I'll be looking to enter. at the bottom of this mitigation breaker, my bad, breaker. All right, we have this order block being respected. All right, close down using respect. Yep. We have this intermediate term high being respected pretty well, right? Because it overlaps with a 5-minute fair value gap right here. This one right here respected it. Boom. As well as that 5-minute fair value gap was overlapping with this 5-minute breaker. All right, indicating that, you know, they would be looking to mitigate their losses there. All right, so my idea is, okay, maybe we get another retap into this. It's above discount, that's fine. Fine by me, above discount. And we'll take it, we'll take this trade. Oh no, did it go down? Okay. We don't void the trade yet. Damn. Let's put it here. Wait, why is his risk reward ratio kind of crazy? Let's put it here. Is my stop loss too crazy? Is there anything else? Maybe I could use this one instead. Let's put it right here. Let's move it down to this one right here. Yes, let's try this. All right, let's get that. Bruh. Nah, I cancel. This one cancel. Bruh, come on, bruh. Now, one thing I saw throughout this was that if I were able to enter off of this, I would, right? If this happened at the time where I was analyzing, which I will not know until I'm doing it live, obviously, right? But do it off of this fair value gap right here. But I wouldn't know. I wouldn't know. Because at the time of me pressing that replay, this already showed. Actually, I take that back. I take that back. Because this breaker, we disrespect, or we closed through the breaker right here. But we tapped into it, showing we respected it. So looking back, I would have just missed this trade. I would not have been able to enter. We also have low risk sell forms when we trade through a breaker and we form a breaker or mitigation. Quotes by the profitable traders themselves. Well, this says silver bullet. And this, how do you know it's just why? Because we trade this breaker. Yep. And then we have that above. I'm gonna be right back. I'm gonna get some water. I'll be back. Oh, I mean, I was stargazing. Oh. Now, let's say I was less greedy. You know, I didn't put it at the mitigation block. Let's say I put it right here. This further I got right here. I don't know. I don't know. Real time is a little different. Don't know what I would do. But, if you think about it, that is a possibility. I see. That's what it is. Okay. Is that what he calls it? You know, I feel like I could have caught this trade. I feel like I definitely could have caught some of these trades. I feel like in real time I would have more time to analyze this because look, I just spammed next for like, what was this? 6 hours? Dude, I would have been looking at it. I probably would be like, oh, you know, we got a mitigation block right here. Oh, maybe I could put it at the bottom of that mitigation block. It's still in that lines with the golden pocket. Maybe I could have done that. Could take a dub, sweet dub. Now, question is, do I take this as a dub or a loss? I'm gonna remove this box because it's kind of all right. Where did I keep it? All right. Do I count this as a win or a missed? All right. So originally, my original trade was at here. We didn't get it up to that. We didn't get it because that would require a retap of this mitigation block to go lower. But was I just being too fast about it, right? Was I being too too fast about it? Because in real life, I most likely would have seen this. I most likely would have either seen this as well. Did that? I don't know if that oh, there's nothing there. Let's say for the sake of back testing, right? Because at the end of this, I'm gonna remove like one or two wins, because it may either be, oh, I'm sleeping, or I missed it, I'm driving, I'm doing something that would make me miss the trade. So at the end, I'm gonna minus one or two of those. But for back testing, I just want to confirm the strategy works. Or I just want to confirm it. Or I don't care about the risk reward. I don't freaking care about that. Because this is not even real. It's not real money. So let's say, for the sake of backtesting, let's count it as a dub. Right? We'll count it as a dub. All right, actually, yeah. Why did I put it down here? Why was my take profit down here? Oh, fair idea. Now, of course, I could, you know, have it go lower. Let's actually see what happens. I'm curious what happens. Do we actually sweep this, or do we do something else? Or do we take the fat out? Oh, we took the fat out. Interesting. Interesting. Okay, yeah. Confirms my hypothesis. I'm never going to put it down here. Like, sweep all this. Yeah. Don't be greedy. Don't be greedy. Alright, so the one day, yeah, that's fine. That's fine. Okay. I'm liking how the 5 minute I'm getting more trades. Right? More trades throughout the month, I swear. Like the other one. I mean, we had 6 trades. From May to August, as a trade a month. Right here, I'm kind of averaging like there's 4 trades in the month. It's not bad. Not bad. Alright, trade 1. Let's do success. Wait, did I already take a picture of this? Oh no. Okay. Right. This was the other one zoomed out. Let's do one zoomed out. 1, 4, 3, and then 1 zoomed in. What the hell I was gonna say? I swear we like touched earlier, yeah. Let's do right here is an F V G. Right here is also an FVG. Right, we have that there. We can have, let's label this as 1. Yep, 1, 4, 4. 1, 4, 3. We got the 5-minute time frame zoomed out. We got So on 1 day and 1 hour, we tap into a bearish fair value. One, there's a 5-minute order block. Use that as the entry terminal for our stop loss. Unicorn. Now, I would say I will mention my initial entry was the bottom of the 5. I wouldn't have gone entered. I need to do something. Hold up. To do the strategy changed after samples. I won't say change. The strategy was modified after. Pretty much everything is the same, but we analyze on 5-minute time frame, and we will move the 5-minute What else? That's kind of it. That's kind of it. Yeah. Oh yeah. Structure is way better. Using super blocker. Yeah. Or required now. Is that it? I feel like that's it. It's the same concepts, just on a lower time frame. It's like slightly modified. Yeah. Yeah, I'm leaning very highly towards the 5-minute structure now. Like extremely highly. So this was like 2.5. Plus 1, 2.5. Oh, this would have been 52. Alright. Let's go and hit another one. This one's not going to use. This one's not going to use. The next draw on liquidity I see is going to be up here. Unless something aligns on that daily where it's like, oh yeah, up here, 97. There's nothing up here. Yeah, so 97. Oh, okay. Next point of interest, these ones right here. So did I document that correctly? 52, yep, yep. Yep. Yeah. Okay. I'm like pretty certain all of this is going to be swept. This low resistance liquidity, all of this right here is going to be swept. Hopefully, we tap into this 1 hour Ferrari. That would be the most ideal situation. However, if we sweep all of this and then we see it break down, on the 5-minute, I really got to see the structure. All right, that's my interest. Or we go down, smack this right here. I'm not going to be interested anywhere in between that price action. So let's see, how long would that take us? So we're on, yeah, there's nothing else. Yeah, we tapped into that. There's really nothing else. All right, that's the game plan. Let's see how long it takes. Oh, Bitcoin's not gonna take too long. To be honest, not take too long at all. All right, yeah, it's not take too long at all. Whoa, okay, we want to go down. No? Okay. Fire up. Smack this. Smack this. How long is that? A week? A week of me not doing nothing? Okay, is that December? Is that going to hit December? I mean, current price action. So it's really not doing anything. It's just in this range. Everyone's sleeping for the holidays. All right. It's all right. Is it all right? All right. All right. So there's it's just ranging. Like you could see clearly, it's just ranging. just in an area of consolidation. Look, right. The low, these are the highs. It's in the range. It's just not really doing much. Sweeping these, and I go up, sweeping this, da. So I would say that, yeah, these are still going to be my draws in the quickie. Yeah. Okay. We did do this. However, I am going to retest 2024. I need to do a retest of that because the strategy up to example 37, what was that? '37 started on September of 2025. So I can do the whole year of 2024, 2025. I think that would be great. Now, okay, let me go and redo that to December to the present day. All right, that was pretty good. Okay. All right, it's most likely going to tap into here, sweep this, and then yes, some sort of reversal there, or I'm just not interested. I'm simply not interested. Wait, let me see. What's something else happen? Yeah. I don't need a day 8 to do that. I could do that freaking right now. Matter of fact, I'm gonna do that right now. Let me update something on this one. Right. I'm going to take a break on this, but I'm going to be watching videos regarding this topic to see if there's anything else I could soak up, anything else I missed, and I will be taking notes on that. But I may be back around like 8, 9. I might not be. I might just save it for tomorrow. Do it tomorrow. I don't know. We'll see. But okay. We're back after dinner. Showered, ate, whatever. All right. So I'm pretty much scrapping the idea of keeping track of both. Right now, I'm just gonna go into using the time frame alignment, the 1 hour with the 5 minute market maker model, but everything else is literally the same. It's the same. And yeah, I'm gonna start a new page, but since I finished up until present day for 2025, I'm gonna redo it for only the year, actually 2024 to I think August of 2025, because that's when I started implementing that. So September. So I'll do it up until September. So from January 2024 to September 2025. That's what I'm gonna back test. This page is gonna be dedicated to that. Everything is the same. Anything new? I think I already covered it. Yeah, everything's the same. Nothing new. All right. All right. So this chart, we're gonna have to erase the entirety of all the stuff. Just move all the drawings and start from scratch. So 2024, January 2024. Okay. So what has happened? We bounce off of this. We might go and sweep all-time highs. And also, once I'm done with that, I'm going to probably pivot to maybe gold. I feel gold has some interest with my stuff, so maybe gold, or maybe do I want to do NASDAQ? I don't know. I don't know. We'll see. All right. Draw the on liquidity. All right. I'm pretty sure we're gonna tap this as we bounce off of this perfectly. There's probably a smart money reversal somewhere in there, somewhere in here. So yeah. Oopsie daisy. Yeah, somewhere in here it is. Or maybe, yeah, you probably get like a lower spy somewhere here. Somewhere in this. I mean, you would have smacked right here. But anyways, that's not the point concern. Point concern is this. Wait, did I have it on one? I did have it on one. Okay. All right. Well, there's not really much unless we go and sweep these lows or these lows. So I wouldn't necessarily be interested in that. Yeah. Yeah, we gotta sweep that. Gotta sweep it. Alright, let's wait for the sweep. Alright, we swept it. Damn, Bitcoin was only 44K. Alright, we swept it. Let's see what we want to do. Alright, I can see that. I can see we have some consolidation right here. All right, leading to that sweep. All right, we got one hit here, another hit right here. That's 2 hits to it. 1, 2, and then the rest of this sweep. All right, I am looking to short this. Let's see. We get this right here. With that, we get let's go back in time here. We get that right here. Well, breaker has to form. Breaker forms right here. Has to be traded through, right? Let's wait until it gets traded through. Okay, we got traded through. We have this right here, 5 minute. I got respected here. And there's also this right here. All right. Oh, wait. We have one right here. I didn't even see this one. So we have a 5 minute perspective. Right? No. They don't overlap. This one overlaps though. Oh, what the hell? I can't see that. Yep, that one overlaps. So we could put it right here. This right here is the instrument. Don't know why they don't do that. But let's see. And then down here. And then possibly target these lows right here. And target this one here. But let me verify. Right? What's happened? Got that respect right there. We have this. You know, it is January 1st, so it's not that great. Could go up. Or we could go up. I wish we had stronger signals, but I mean, it is what it is. Wish it was cleaner. It's not as clean. Any inverse for our gaps? Got this? No. No inverse for our gaps. So, alright, let's see. I mean, we do have the phases correct. Let me check the fixed range volume. So I think this is kind of what led to the break. Yeah, that's much higher. That's much higher. That's significantly much higher. But is that a bad thing? I have mine here. I have mine right there. Alright. Could go higher. It most definitely could go higher. But that's what I'm seeing. Where we went straight up. Up, 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 up. I think we can go a little bit down. A little bit down. Shoot this. We have a signal here, but it's not as clean. I wish it was more clean. We have this right here. I would put up the bottom of this. I'll put up the bottom of that. What's happened here? Whoa, whoa, whoa. I didn't even see what happened. I didn't even see what happened. Okay. I would answer. I'm not gonna lie, I would answer on this. Let's stop us a little bit off here. Yeah, we traded through this breaker, this breaker. Yeah. 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 Alright, I'm answered on this. I'm answered on this. Take the L, take the L. Wait, what? Did I already take the L? Would we have taken the L on this? Boy, that's kind of crazy. It's kind of crazy we didn't even tap into this. Okay. Whoa, 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 whoa. Bitcoin, Bitcoin, chill. Okay, okay, we didn't hit the, well, my stop loss because I put a little buffer, but at the same time, we would have hit it. Right, we would have hit it. We would have hit it, so I mean, the idea was right too. The idea is right. Mind you, we could most definitely target these right here. 6% move? I feel like that, I would do that if I'm like super greedy. If I'm just greedy, I'm just gluttonous. But we just want to affirm our strategy works. Just be able to move with confidence. Right? Which, kind of hate that we didn't do that. Because the lowest, yes, I mean, yes. We have this. Forget with the breaker. Yep, that's, yep. respecting it, going down. Yeah, this is a dub, yeah. Like barely though, barely, man. Maybe I should put like a. I would usually round up. I I would in this case I would put it 50. Right, I would put it 50 because I would see. Wait, did we get hit? What is this high? Oh my goodness, we would not have gone hit because I see this 140. I mean 840, right? I mean 45 840. I'm like, okay, I'll round up to the nearest 10th up, right? So 850. That's what I would do. 850, and it was 849.9. You know, we'll take it. 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 Let's zoom out on this one. Is this 3 on? 2.94. Arms round up to 3. Alright, so this one is clear phases of the original. This is clear as day, right? I mean, it's still a dub. So let's take the dub. Need a 3 or. Okay. Let's take the dub off of that. Should I get treats though? I use my free things. Don't journal right now. But I don't think it's required. I don't need treats though. It's $30. It's more than the freaking trade you. Let's go. Start of backtesting. Okay. What is my thing? Oh my goodness, it's gonna fill all this. All right, example 2. Let's see. Example 2. All right, next example. We are going to see. All right, we kind of. Oh wow, let's work on this. So, what is the next output? Did we go up from that? You know, I would be inclined to if we tap through here, I'd be inclined to go up. But it's kind of a little bit like, you know, what the hell? Like, what the hell? All this liquidity. It's crazy. Crazy how fast Bitcoin moves. we did sweep this. I'll give it that. We did sweep that. We didn't tap into a higher time frame, like a 1 hour PD array. But we did sweep this, which is very important. So I would go in the 5 minute and be like, okay, you know, one could argue this is the consolidation point. And then this is the distribution up into this. But why did we? I don't know. No, whatever. This is flipping the coin. Oopsie daisy. Okay. I wouldn't even trade this unless we break through this breaker here. Alright, because my rules per se. Yeah, trade through it to prove that they don't want to prove institutional Oracle has switched. So up here, I'm not interested. I'm not interested in this, to be honest. Once we close up on here, but I feel like if we do, we just might miss it. Yeah, we might just miss it. But we only take high quality trades. There's no. Okay. Okay, we trade through here. You see how like I just missed it? I just missed this entire thing. So probably would not be interested in this until maybe I'm not sure if we go up or we go down. I have no bias on this. This is strange now. I feel like we can go down. Is there a 1 day? What up? There's no 1 day. There's that 1 day inverse fair value gap, which would line up with this fair value gap. Which I guess lines up with this inverse fair value gap. And on the 5 minute, we broke through this breaker, but at the same time, like we just like my bias has shifted. Plus, it was kind of too late unless we go down and sweep all of this and then go up. But at that point, Or can you argue this? Thing is, we swept that liquidity. Swept it. Maybe this, you could argue for this. Accumulation 1. It's low resistance liquidity. That's what's not required. Required. What was a trade where we didn't have? It was a successful trade. This one. This one wasn't required. Oh, but we didn't go down all the way. This one we swept it. Yes. To do is no, I don't know. Let me see. Where's the success? Where's the market making model? This? Damn it, I can't even see it. You know, I don't think it's required. You look at this, I don't think it's required though. We have this though. But then why?
Now, how
This virus? I already watched this. Okay.
So when I call a original consolidation, that is where the market is accumulating. So what I did here, I seen these two candles here, and in the body of this one, and the body of this one. So right away my eye jumps to that because it's what? It's a smooth edge. So I want to use that as the high of the original consolidation with the low, the lowest low. See how easy that was? So when I'm looking at the original consolidations, I'm looking for a repetitive overlapping or reoccurrence of a level that's being constantly referred back to inside of consolidation. Now I'm anticipating the market to go higher, to go above the buy side here, and then reach up into this inefficiency up here. But I'm anticipating also that it should offer some measure of consolidation because if it's going to do that, my premise behind swing trading is it's all on the basis of a market maker sell model or a market maker buy model. That's what swing trading is, whether you realize it or not, whether you want to subscribe to it or not. That's what the market's doing. It's moving on the principles of running to liquidity or it's running to inefficiencies. And if it's not doing that, it's consolidating. And if it's not doing that, it's highly manipulated, and then you're having some kind of manual intervention, some kind of shock and awe, surprise rate announcement, some kind of wartime event, something that would destabilize the marketplace that you can't and I can't predict before it happens. So this area here is where I'm framing that. You can see still, look how many times it's referring to that same level that's based over here. So when I'm looking at consolidations, I'm looking at levels that constantly repeat. I'm not just going to layer top of this high or this high or this high. I'm looking for something that frames it very clearly.
Oh.
When you go back and look at my examples when I'm doing this in the past, and I've been doing it for a long, long time since the 90s, look and see how I'm drawing your attention to these specific consolidations. Do you see it? Do you see it as a consolidation? Go back and look at your other annotations that maybe you have journaled before. Start looking at it like this. When the market does eventually leave the original consolidation because we're unwillingly bullish, we have traders that are trapped down here. They don't want to drop down below to give them an opportunity to get out. Even though the market does eventually drop lower here, they may not come back down into this area until a later time. It could be weeks, it could be days, it could be hours, it could be a time that's unknown to you. What you're looking for, what I'm looking for, is trades that make sense where the market's reaching for liquidity inefficiencies and then reversing for the sake of going back against the original consolidation where people are going to see this as a support level. And I don't trade support resistance. I attack support resistance. And I use inefficiencies as targets or means of entry to trade against those same ideas. When we can frame the original consolidation properly, then once we leave it, how are we leaving here? Look at the body there. Yeah, we had a wick here. We had a wick right there too. Look at the body staying inside that original consolidation. See that? That's characteristic to algorithmic price delivery. It's indicating to individuals that I'm trying to show you that this is the language that traders that use this information and the algorithms, the high frequency trading algorithms, they highlight these things in price. And so it gets their high frequency trading algorithm in the hunt for long entries. When is it allowed to take long? That candle right there tells you. So now we can then refer back to the same level here. If it trades back to that level, what's it doing? It's returning back to the original consolidation. The original consolidation, it can leave it. It doesn't have to touch it, but if it does, that's usually a trade. So this would be your original entry. Okay, so you could go long there, but sometimes it won't offer a return back to the original consolidation. So it might just need a higher order entry and not offer something right at the high of the original consolidation. The market rallies up, trades right into that 60-minute fair value gap. City, body's tell a narrative, but it's not interested in going any higher. Why? Because look at this big candle drop down there. Wonderful. We have inefficiency here. We have inefficiency here. Drops aggressively below the original consolidation. Right back to the high of the balanced price range right there, which is also just below that old low right there that make these relative equal lows what? Suspect for sell side. So sell side liquidity resting below there. That's the draw. If it's going to go well beyond the low here, where the original consolidation's sell side liquidity would be resting. So in layman's terms, what we're saying is it's building up a lot of interest to go higher. Then it rips higher, comes back down, gives one more chance. Okay, one more chance. Then takes off, takes above this high here, then reaches up into the inefficiency. Then at that point, does it indicate that it wants to go lower? Because if you're bearish and you're extremely bearish to the degree where you think this is a good entry point, you can sell up here as it does that. But eventually the idea was to draw
Did not mention
back down into this
low
area here. But if it goes below this, how far can it go? How am I referencing this? Huh.
This is the same video.
So that PVA right. What?
Are you a MMXM trader and you have a hard time finding the original consolidation? You think that this is the original constellation, and you go for there, you mess up your RR, you mess up your trade because that is not the original constellation, or the market just reverses back down and takes you out or reverses against you, right? Are you a trader who has hard time finding the original constellation of MXM, which is very important? The way you find the original constellation for MXM is CRT. If the original constellation is not a CRT high or CRT low, disregard that as being a original constellation.
What? We're talking about C or T. C or T, ICT. What is that? Candle range theory?
In this case, this is not a CRT high, so it is not a original constellation. Your original constellation will be right over here, and your entry will be here to the upside. I'll only teach you guys how to find it. I'll not teach you guys how to execute it, right? The best way to find a original constellation are through CRT, at the CRT high, CRT low. Let's go to a blank chart. Let's go to a blank. You know what I'm saying? Monthly time frame. Click from monthly CRT here. Okay, market is 2,000 monthly CRT low. Let's see if we get a MXM here. Let's see if we get an original constellation. Already spotted right here. Even I myself, I used to be an MXM trader. I stopped trading it because I could not find the original constellation. Now CRT helps me with that, and to me, CRT is the actual MXM concept. Fuck that guy, MXM trader. He just come back. Okay, this is how you find the original constellation is through CRT, right? I could not find the original constellation. Now CRT helps me with that, and to me, CRT is the actual MXM concept. Fuck that guy, MXM trader. CRT helps me with that. And to me, CRT is the actual MXM concept. Fuck that guy, MXM trader. He's a scumbag. Okay? This is how you find the original constellation is through CRT, right? Over here, the second constellation phase. You don't even have to look for the second constellation phase. Sometimes it doesn't have to be there. It could be there. Sometimes it doesn't have to be there, right? The third one over here, right? Going from TP1, TP2, TP3, right? You can see high resistance around liquidity. This causes move to the upside. Let's go to a lower time frame. We get one more examples of this, right? This is the hourly. This is the daily CRT high. The CRT high. What is there? Oh, there's a original constellation. How do you know that's original constellation? Because it's at daily CRT high. And through using time from alignment, if you have a daily key level, we go to hourly to look for that original constellation. Weekly, 4 hour. Monthly, daily, 4 hour, 15 minute, right? Right here, just find out. You may find the original constellation easier, but guess what? He has years of experience. As a beginner or even advanced traders can't find the original constellation because they don't know CRT. Personally, I traded MXM before. I followed the MXM trader. Fuck that scumbag guy, because that guy. Yes, he may find out MXM. He may find the original constellation easier, but guess what? He has years of experience. As a beginner or even advanced traders can't find the original constellation because they don't know CRT. And to me, CRT is MXM. It gives a meaning to MXM. It has a meaning to MXM. It gives you the original constellation. And you will never find a time where there is not a original constellation, right? You will never find a time that there is not a original constellation on the CRT low, right? But if you do see an original constellation, if you do see a constellation, but it's not CRT low, disregard it because that is not the original. This right here is not the original constellation. How come? Because it's not CRT low. So you disregard the whole shit. You go beside of this because it's CRT right over there, right? I've already been before. I have to redo it because last one didn't have a microphone. It's all fine. But I've explained it already better on that video. But this is a little bit better as well. You can redo it, right? So you can see right here, very simple. Original constellation. I'll give you guys more examples. Let's see if we got more examples here. Like yesterday. Let me see. Yesterday, let's see yesterday, right here. Was there original constellation here? 53 time frame? Yes, sir. That right there is the original constellation. Right over there, right? If you go to zoom in, right? If you go to our 1 minute time frame, there is accumulation there, right? So that is the original constellation. So that's why we're going for that and go higher from here, right? Go TP1, TP2, TP3. That makes sense. Shut your nerdy ass up, okay? Thank you for watching. And to the chats who are watching, we're actually paying attention. Shout out to you because I'm the one. No, I'm not the one, but this is the real MXM. Don't get faded by picking a wrong ass MXM. People probably think, oh, is this MXM? Oh, this is MXM. I go to hourly time frame. How do I know that this is how do I know this is the original constellation? Let me see. Yesterday, I can let you see yesterday. Right here. Was there original constellation here? The time frame? Yes, sir. That right there is the original constellation. Right over there, right? If you go to zoom in, right? If you go to the 1 minute time frame, there is a key. But I've explained already better on that video, but this is a little bit better as well. That's what we do it, right? So you can see weekly, 4 hour, monthly, daily, 4 hour, 15 minute, right? Very simple. I can go to our 15 minute time frame, look for one right now. How do I know that this is the original constellation for a 15 minute MXM? Because this high is the CRT high. This high right here is the CRT high. So that's how that is the original constellation. That's prevented from happening. It's still valid though, right? Now all you gotta do is de-erasing. Take the same trade to the outside, and you take profit here. That's the original constellation. How's the original constellation? Because the CRT high. To me personally, I traded MXM before. I followed my MXM trader. Fuck that scumbag guy. And many of you guys may fucking disagree with me, but you're scumbag too then. But fuck you, right? And
This is how you actually trade candle range theory, or CRT for short. You guys probably heard about this on the basic idea about it here. So basically what you want to do is mark out a singular candle's high and low, and then watch how the second candle that sweeps the power or faking it just accumulated. So now we would go in the 15-minute, basically the 4-hour range that I marked out in the 4-hour. So what we're looking for here is a change in state of delivery, or our favorite entry model 9R.
Candle range theory is one of the most powerful setups in the entire market. I'm gonna show you the end. So in this case, we're gonna all you want to do on the out either. When that happens, we know that both the high and the low of any candle on the 1-hour time frame. Now, the next thing you want to see is you want to see price come and take out either one of those levels and reverse right back down. So when that happens, we know that price wants to move to the opposite end of the candle where the rest of the liquidity is sitting. We draw for an entry on, take our entry on the CRT low, get a
Most traders lose the most money during consolidations. It's crucial to spot consolidations early by looking at price.
What happened? My name crashed. Oh my goodness.
Action. Here are 3 steps to help you out. When we see a fair value gap, our first assumption is it will follow through. That means we have to follow through either, but keeping those profits during consolidations, that
Everyone, welcome back to the topic. Getting right into it, I first want to answer the question of what actually defines a consolidation and what it looks like in a price chart. The focus for this concept will be on the daily and 4-hour chart, as these are the 2 time frames that I prefer to use to determine price delivery. However, this concept is fractal, so anything I show you on period of time, which forms what we know as a consolidation. In very simple terms, a consolidation is when price is trading within the internal range and is lacking clear directional order flow, which creates low probability conditions that you want to avoid. Also, if you were to view this 4-hour price fractal line,
This is trash.
daily chart, you would see a lack of displacement within the internal range. This often results in unclear formations of the daily candles, which makes it very difficult to frame the straight chart moves. So for all reasons, as previously mentioned, the general protocol for consolidations is to avoid price for as long as it is trading within the internal range between the external low and the external high. Make sure to keep this understanding with you as we move to the next part, just how to actually anticipate that a phase of consolidation will occur. And this is an extremely important concept to understand, as it will keep you from speculating in a market that has a neutral bias for a defined period of time. A general rule of thumb to follow is that the market is always moving in a continuous cycle of small ranges to large ranges, or in other words, a consolidation to an expansion. This most recent 4-hour piece of price action, we can see that rule playing out in the market. Starting here on the left side of the chart, we have an expansion, consolidation, expansion, consolidation, expansion, consolidation, and expansion, and consolidation. With that now annotated on the chart, you can visualize and get familiar with this price action tendency. The market cycle consolidation will occur, and this is an extremely important concept to understand, as it will keep you from speculating in a market that has a neutral bias for a defined period of time. A general rule of thumb to follow is that the market is always moving in a continuous cycle of small ranges to large ranges, or in other words, a consolidation to an expansion. This most recent 4-hour piece of price action, we can see that rule playing out in the market. Starting here on the left side of the chart, we have an expansion, consolidation, expansion, consolidation, expansion, consolidation, and expansion, and consolidation. With that now annotated on the chart, you can visualize and get familiar with this price action tendency. The market psychology behind this is that unaware traders will be drawn into the market after seeing these large large ranges, only to be caught in a period of consolidation. And oftentimes, when attempting to trade within the smaller ranges, traders drain both their financial and mental capital attempting to catch a trend move before the market is actually set to do so, and will miss out on the expansion when it eventually occurs. The goal of this video is to flip your perspective so that you can anticipate consolidation, avoid it, and then in so make yourself available for when the expansion is likely to occur. With that being said, after a large range expansion, the consolidation will only occur in one of two places. On the left here, we have a consolidation that's taking place at a point of reversal after prices expanded into a higher time frame objective. And on the right, we have a consolidation that's taking place in between two directional legs of expansion after a reversal point is already formed. Starting with going over a consolidation that's taking place at a point of reversal. Here on a multi-chart, we can see price retracing back into a previous range and engaging levels within a deep premium. Looking left, there are relative equal highs paired with an imbalance. Also, if we take a series of upclose candles acting as one singular order block from the opening to close price and extending that out to the right, we'd see price engaging and reacting off the 50% level. With all these confluences paired together, it would be a sign to look for lower prices in the future off that specific point. Breaking this down to a daily chart, we have this monthly premium array that we just previously outlined, which is at 50% of the order block. But most importantly, we have a large range expansion that ran into that price level, which builds the anticipation for this consolidation, which we can define by this external high and this external low, which price trades within that range for a defined period of time. Now moving on to go over a consolidation that's taking place in between two continuous legs of expansion. Similar to the previous framework, but on a weekly chart, we have price retracing back into the previous range and engaging a bearish order block in a deep premium, and this builds the framework for a bearish bias, which we can anticipate lower prices in the future. Now moving down to a daily chart, this level here is noting that opening price of the weekly order block. Then price reverses and expands away from that level to create this period of consolidation, which we are defining again by the external low, the external high, and then eventually continue down expanding again once that period of consolidation has ended in the direction of the previous leg of expansion. Before moving on to the next part, I want to quickly recap what was already mentioned in the video, as it is a core foundation for this topic, and it'll be necessary for you to understand before going into how to actually trade these specific conditions. Starting with number one, consolidations are small ranges of price action, and this means that during this phase of price, the market will lack any clear directional order flow. Two, focus on daily and 4-hour time frames, as this will be the sweet spot for judging higher time frame price delivery, which allows you to be sure that you are trading in the proper market conditions. Three, avoid participating within the internal range, and this is a very important rule to understand, as it will keep you out of a low probability market that has a neutral bias. With that recap out of the way, we can now talk about how to operate within the two types of consolidations to get on-side with trade opportunities. Once you understand where a consolidation is likely to form and what the future direction is, as we just went over earlier in the video, all the focus moves to the way that price interacts with the external range. First, starting with examples of a market we are anticipating topic. Getting right into it, I first want to answer the question of what actually defines a consolidation and what it looks like in a price chart. The focus for the concept will be on the daily and 4-hour chart, as these are the two time frames that I prefer to use to determine price delivery. However, this concept is fractal, so anything I show you on the daily or 4-hour can be applied to any other time frame that you use. Every phase of consolidation begins with an initial price range, which is defined by the external low and the external high. From there, the market trades in between those two price points for an extended period of time, which forms what we know as a consolidation. In very simple terms, a consolidation is when price is trading within the internal range and is lacking clear directional order flow, which creates low probability conditions that you want to avoid. Also, if you were to view this 4-hour price fractal on a daily chart, you would see a lack of displacement within the internal range. This often results in unclear formations of the daily candles, which makes it very difficult to frame and trend moves. So for all reasons, as previously mentioned, the general protocol for consolidations is to avoid price for as long as it is trading within the internal range between the external low and the external high. Make sure to keep this understanding with you as we move to the next part, which is how to actually anticipate that a phase of consolidation will occur. And this is an extremely important concept to understand, as it will keep you from speculating in a market that has a neutral bias for a defined period of time. A general rule of thumb to follow is that the market is always moving in a continuous cycle of small ranges to large ranges, or in other words, a consolidation. Would that be two types of consolidation? Expanding into a discount rate to eventually reverse price to the upside, or a consolidation that is taking place after a previous expansion to the upside with the expectation that the draw is still above market price. The first scenario that can be encountered within this framework is a run into the external low prior to the external high being engaged. This will be classified as an AMD, or an accumulation, manipulation, and distribution you can encounter within. While I don't see this placement, this close above this example when the draw is to the upside price. Now that you have a good understanding of the three different ways the market can leave a consolidation, we'll move back to a real price chart and walk through the two examples which were mentioned previously in the video using the same framework. Also, the graphics before were shown in a market with an upside draw, so the next examples will show consolidations in a market with a downside draw. Recalling this piece of price action from earlier, this is a consolidation taking place at the point of reversal after achieving a higher time frame objective. The market makes a large range expansion into a monthly order block, which sets the anticipation for a potential consolidation. We then see the range formed with price trading internally for an extended period of time. At this point, after anticipating the consolidation, all we would have to do is draw out the external high and external low and wait for price to engage either side before considering participation in this market. Here we can see the market first engage the external low of the consolidated range, which means we can rule out AMD. As for that to occur in this scenario, when we are seeking a lower draw, price would have to run the on ES, which is a core.
Okay, I didn't really learn too much from that. Whatever. Okay, I mean, descent from the high to the low. Alright, I'm just gonna take one more trade and then I'm gonna call it for today. What did we have? We had a let's wait here. 1 hour. That's what it is. And we're gonna see what happens off of that. Alright, let's see, do we even get our signal? I don't like this. Man, my eyes are cooked. I don't like this. Don't like how we don't have a. I'm gonna remove something that I'm gonna remove. What's this? Move the freaking this. What that? Alright. This isn't a swing high. It's not an intermediate term high. It's not even a. Yeah, it's not a swing high. Right. It's not a short term high. So for me, I would say price has to go in and ideally go up here, tap it, respect it, and then go down. We did trade through these. I still don't like this. I really don't like that at all. But let's see what happens. Does price even get into that zone? Okay, it did. Interesting. But I didn't, we wouldn't have gone in this trade at all, which is fine. Which is fine. I was waiting for something like this. Yeah, waiting for it to go on discount. Didn't. It's fine. We swept all of this. I wouldn't be surprised if we swept it. But alright, I'm gonna mark this as missed. I missed the trade. Let's probably just consolidate for a little bit longer. Let's see what happens. Other than that, there's not much. But it's fine. We'll mark this as missed. Okay. Alright, that's fine. For the day, we missed one. Alright, that's fine. I'm gonna go do this literally tomorrow too. Okay. Alright. See you guys tomorrow.